think given like all of our backgrounds, in some way, shape, or form, we've been, I don't want to say traumatized, but I've had certain experiences in TradFi where we're like, oh, let's build this solution on chain that can kind of fix or improve a lot of those kind of middle and back office processes that maybe historically have been frustrating. That said, over the past year, I've actually been extremely pleasantly surprised by how progressive institutions have been in this space and have continued to be in this space, despite market conditions, obviously a very mixed regulatory environment. So I know you guys obviously talk to a whole kind of host of institutions as well in your day-to-day. Give us some insight in terms of kind of how and why they kind of continue to explore the space, what they're excited about, like give us some alpha in terms of what their views are and how they're kind of pushing ahead.
Sure, so I'll take two examples maybe on how broken things are in TradFi and things could improve. So what we worked in is asset-backed securities. People are obsessed with tokenizing securities, but there is an asset backing that security. So in traditional finance, what happens is that the security is backed by 100 loans. You'll have to go do a due diligence on those 100 loans. The entity doing the due diligence, which is a verification agent, could be an auditor like Deloitte or a custodian bank like BNY Mellon, and you go through individual loans. What blockchain is allowing us to do, we use an AI engine to read all those loans, create an exception report, a BNY Mellon kind of custodian looks at that, certifies, and I create an NFT on the subnet, which means that the identity of the loan, which is the asset backing a security, is now established on the subnet. So for all future transactions, you don't need to do another due diligence. So if you think of it from TradFi processes, so due diligence is one, reporting is another. At the end of the month, all money collected against loans after 15 days is reported, which means 30 plus 15, 45 days. You do a couple of reconciliations, you are at 55 days. So something that happened to my pool is known to me as an investor 55 days later. With the blockchain, use of smart contracts, that is straight through, and I know real time what's happening to my portfolio. So we have been building on Fabric. So we have an administration platform called Intane Admin for 4 or 5 years. When we had to add the tokenization layer, then we had to look at a better platform which would allow tokenization, but we still wanted to remain in a permissioned environment which we could control completely. And control completely not in terms of what's happening on the platform, but for example, every node is hosted inside the United States. Every validator is an identified party, which is either a US institution or a US resident. So subnet allowed us these advantages because without this, institutions would not come on board a blockchain network. And the additional part is that what we are trying to offer to institutions as an investor is, as I said, that you can do the due diligence on that token on the network itself, which means that what is lying behind the token should also come on the network. If I'm on a public blockchain, it is impossible to convince somebody's asset or the data about that asset to come to the public network. But now with us, what we can do is get people to put their underlying loan data on the subnet. So on our subnet, if you zoom into a token, you see all the loans, you see all the data of that loan. So it's like DD on a subnet, which wouldn't be possible otherwise.
That said, not everything is all like flowers and roses. So obviously, change and broad adoption, especially in the TradFi landscape, will take a lot of time. A lot of these, not just partnerships, but use cases take many, many months, if not years. And while we have seen a decent amount of traction and optimism, obviously challenges, blockers, and hurdles kind of continue to persist. So from your various perspectives, can you maybe outline what you guys have found to be some of those barriers, whether in your own go-to-market strategy or from like a broader institutional adoption perspective, and how you think either you or we as an industry can kind of help push this forward? Maybe Siddharth, if you want to, I know you've been at this for a very long time, so maybe you could start.
So two things which get often talked about, they for us are short term because means we run the process exactly how TradFi runs, so we don't have regulatory issues. It means short term fear, uncertainty, doubt does impact sentiments. And that's why the way I see it is challenge really is not from TradFi. When we started building the tokenization platform last year, after having been in this for 4 or 5 years, I realized that the big challenges within the blockchain industry itself, the custody solutions in blockchain industry are absolutely broken. Custodians in blockchain industry charge 20 bips. Custodians in TradFi charge 2 bips. So is the whole idea that this is a disintermediated world is nonsense. If the intermediary here is charging 10 times what the intermediary in TradFi is charging. I think the fix, what I'm more positive about, is that TradFi institutions taking up roles in blockchain. So a BNY Mellon starting to offer digital custody will fix custody. With a lot of large banks having liability tokens or deposit tokens will sort out the payment stablecoin problems. Because if these two things get sorted out, then I think everything else in the whole transaction journey is sorted out already.